Good morning, everybody. Jerry here, Spy Discipline, Greystone Trading. I'm going to show you guys how to not chase price. The market has just opened. It's 9:32 on Thursday, August 20th. So I just wanted to go over to you. None of my levels are set. Everything is set from Wednesday, the day before's levels. So I'm going to mark all the levels in real time, show you how we mark out the orb, show you how I mark out Asia highs, Asia lows, the pre-markets there, and wait for a very high quality setup to come to you and not chase price. So if you can stop trying to predict and get rid of your bias, that is the most important thing. If you can stop trying to predict price and wait for SPY to respect levels and either close above them or reject them, you can find some really good high quality setups and get profitable. Now, guys, this is day trading. I have a win rate of about 74% on the big picture. It can go as high as 85 and fall as low as like 66, 67. This is trading. You will not be right every time. That is absolutely statistically impossible. Anyone who tells you they have that perfect win rate is probably wrong, or they are on one hell of a hot streak that's not realistic to maintain. However, guys, I want to mark all these levels with you in real time, show you how this is done. If you like the way all this sounds, like, subscribe, click the link below. I trade Monday through Friday from 10 to 11 a.m. Eastern time. I trade Monday through Thursday, 2 p.m. to 3 p.m. Eastern time. Piles of information on there. Live trades, we call out what we're seeing, reading price in real time, the whole bit. So let's get into this, guys. Previous day high wick right up here. Locks that in. Good to go, right? Previous day high touches. Now, team, I mark the wick and the touches, and sometimes there's a big gap there. Sometimes there's not. For me, this gives you a little bit better of a way to see where it rejected multiple times, and also to see where possible liquidity pools are if there's a big gap in between. So in this case, it's not a huge one, 772.21 to 47. And now if I was to be able to take a trade into this zone here, I'd be looking to see how it was reacting in real time to this. So just to give you guys a heads up on how that kind of works. So the previous day open, I just mark where the market opened at, and it opened right here at the top of this red candle. You guys can see that at 770.36. Now, we'll go ahead and mark the previous day low, touches. So we can come up to here, and you could probably come up to this one here and grab all of those, right? That grabs the body, grabs all the wick here, 1, 2, and 3 wicks. So big double bottom on that yesterday. So I do think that 768.52 will be relevant at some hard point, possibly today, and if not, in the very near future. Now, previous day low wick. Clearly, that's the bottom of this one here. And now we'll mark the previous day close, guys. And all as this is doing is this is helping you form a non-biased of if the market is going to be bearish or bullish. So obviously the trend is your friend, but this will help you understand what price did yesterday and where key levels are of it to draw to in real time when you are in a trade or looking for a very high quality trade. So remember, the whole idea of this video is to show you all how to not try to predict price and try to react to what price is doing in real time. Now, team, this twilight I'm going to mark here, this is nothing more than the in-between session. So this is coming off of a lot of the futures market, and apparently they're going to make options trading available to everyone here in December pretty soon. I think the 9 p.m. to 4 a.m. session will be open for people to trade, if my memory serves me right of what I read. All right, guys, so now we have the twilight high and low, which is the in-between sessions, and now we're going to mark the pre-market low here all the way down. We had this big sell-off with the job claims that came in, and a little bit ahead of that. Now it's market's being bought right back up. So we're going to see now in a little bit if this is going to respond and react to those previous day lows that we talked about with those wicks and all those touches. So let's go ahead and mark out the pre-market high while we're here. We'll put that right there at the top. That's the pre-market high. Let me just zoom in a little bit here so I can get it nice and clean. And right there's that pre-market high. Okay, so now my support, my resistance, my overarching resistance, and my underlying support, and the orb has not been marked. So I'm just going to snatch all those down into an area where we can mark them in real time as our trading window opens. Now, keep in mind, guys, I'd never trade a news candle, ever trade a news candle. And I always wait till 10 a.m. to start my trading. I do believe that you can catch some good moves before the 10 a.m. However, from me backtesting and taking several trades through the years, the 10 a.m. window is a lot more calm. It's a lot more steady. It tends to tell a lot more accurate story after 10 a.m. All the order blocks are done being full. Liquidity sweeps are being done. Order blocks have been filled out. Fair value gaps have been closed up, and so far and so forth. So as of now, team, the top of this 15-minute orb is going to be here, and this will be adjusted. We're only on the second candle of the opening session, being that it's 9:38 now. And we'll go ahead and mark the bottom of it. And these will still need to be adjusted. We're waiting for the first 15 minutes, team. The first 15 minutes of that. So let's go ahead and slide and make this a little bit clearer for you guys. We'll go ahead and pull support and resistance all the way. Support and underlying support out of the way. And resistance, we're going to just go ahead and slide it up here out of the way. And as you guys can see, price is reacting. Coming up here, which is also like, okay, you get your big candle, it pushes up, but it runs into this bottom of this swing point here, top of the swing point in this pre-market zone, which is slightly at 0.740. So lots of stuff going here where the market distributes down, but it's failing to come out here and take out the bottom of the swing point or the medium of this swing point. It comes up, it rejects harshly off that, which is also all parts of the reason why I like to wait till at least 10 a.m. to take my trades. That for me just gives me the utmost clarity with following through the most and the most clarity that you can come across. So here's on the right side, guys, I do use a 2-minute chart. I don't use the 1 minute. I used to use the 1 minute. The 2 minutes just a little bit cleaner and clearer and not quite as noisy. And I use the 2 minute to confirm my levels on the 5 minute, but I always take my entries based on the 5 minute chart, and I'm looking for a firm 5 minute candle close. I use this indicator up here. It's made by Chad Coughlin. He's a member of Greystone. He built this thing out. And that tells you if the candle is firm or weak. So if you're looking for a firm candle for calls, you're looking for the body to be bigger than the upper bound wick for your calls. And that indicates going into your trade that the buyers are in control. And if you're taking puts, you are looking for the body to be bigger than the lower bound wick to insinuate that the sellers are in control of that particular candle when you enter that trade. That firm candle always tells a really true story of who's in control of that candle to increase your odds of a winning trade and a higher probability to go risk-free in that trade and capture that bigger move. And now I know a lot of people don't do that. They like to buy wicks, or when the wicks are forming, you have several touches. Like, for example, maybe someone yesterday was like, in this zone here, it kept rejecting. So they were to buy their calls in this zone here, or it kept rejecting up in here with all these wicks and they were buying their puts somewhere around here for it to flush down. I'm not. I buy a firm candle close. That to me tells a very clear story of who's in control of that candle. However, I do see those other setups and I do like them. For me, what I'm looking for is a very consistent, repeatable entry on all of my trades. Do I have all of my key levels from yesterday and the prior sessions marked? Answer to that is yes. Number two that I'm looking for is, do I have a clearly defined level of support and or resistance, or both marked in consolidation? And then do I have enough draw to exit my trade? So if I am looking for calls, do I have enough room to go risk-free? So typically, let's say, just for fun, hypothetically, we're going to be buying on the close of this candle and it closes right here, a firm candle for us at 767.38, which we're not, but let's say we were. We need to make sure that we have enough draw to get to this pre-market, this aftermarket high, these previous day low touches in this wick here. So you typically need for your options trades 35 to 45 cents or more of movement for SPY to distribute correctly and put you in a risk-free trade. In this scenario, let's say you closed at 767.41, 768.09, you have plenty of room to go risk-free on this trade. You would probably anticipate some kind of reaction at 767.57, but a good firm candle with a long wick like that would theoretically push you through that zone and give you a risk-free trade. So guys, if you like the way this sounds, please like, please subscribe to this channel. I am doing my very best to show you all how I mark levels to bring clarity to the charts and make this a very simple and enjoyable process. Now, guys, about emotions and about psychology, people ask all the time, if you are emotional in a trade and you're very fearful in the trade, or you're very greedy in the trade trying to take profits really soon, chances are you are sized too high and you're lacking a small amount of confidence in your trades from a failure to backtest and prove to yourself that your system and your strategy works. So highly recommend that you journal all of your trades. And if you're not willing to journal all of your trades, then you need to get something like TradeZilla, where it logs all your trades and does it for you, and you can go back and review them. Without a record of what you've done, it is very hard to correct what's going wrong to make you a profitable trader. So the magic of trading, and anything in life for that matter, the magic of your desires is in the work you avoid, right? So if you're avoiding journaling, if you're avoiding backtesting, those are probably reasons why you are not profitable. So you have to do the work for this to work for you, because every trader is different. You're all going to have your unique fingerprint. We're not robots. We're not copying precise trades. We're all going to see things a little bit differently. So all that being said, guys, if you like the way this sounds, like, subscribe, click the link below, and hopefully I'll see you guys on a live session in the very near future. See you guys.